All right. Well, I've been told that we don't have that much time, so we're going to try to be quick. But I'm very happy to have three of our favorite investors here alongside of us. That we've I think done multiple co-investments with each of them, so that's great. Maybe you guys start with a quick intro each about yourselves, your funds, and keep it short as we'll get into the meat of it afterwards.
Yeah, sure thing. So I'll go first. I'm Anton from Play Ventures. We're actually turning 5 this slush. 5 funds under management. 3 of them are main funds. We also operate a separate Web3 games fund through which I've been investing as well. Focused on the earlier stages of companies in the gaming space and Web3 gaming space, based out of Helsinki and Singapore. Historically very focused on studios, but also expanded outside of that. Very founder-driven, and that's what we aim to do going forward as well.
I'm Carlos. I work for Bitcraft. Bitcraft is a early-stage investment platform for video games. We also have 5 funds. I think the 3 of us actually are all sort of roughly the same age. 2 of our 5 funds, representing a third of our AUM, are Web3 dedicated funds, and that's where I spend the majority of my time. Been investing in gaming since 2018 and private equity and growth before that.
Hey everyone, Richard Kim. I'm at Galaxy Interactive. We've also been around since 2018, have a bit over 800 million under committed capital, and currently investing our 3rd fund, solely focused on the interactive side. I look after most of our Web3 stuff.
Fantastic. And usually when we do these events, sort of one of my main goals is to change my mind about at least one thing. I haven't yet today. Everyone agrees that we need to build good and fun games. But so I'd like to sort of throw it to the 3 of you to give us your most sort of controversial or contrarian investment view in the Web3 gaming space. With one rule, which is that if the other 2 panelists agree with you, then you have to go again. And you can feel free to volunteer, whoever wants to go first.
Sure. Don't get mad at me. I think from the fund vintage we're investing in right now, I think the biggest outcomes will be coming from real money gaming. I'm talking casino, I'm talking sports betting. And the reason to that is that it is closest to the already existing behavior of the biggest user group, which is degens out there, and it preys or serves a lot of that same kind of hunger for product. Looking at Rollbit, we're looking at Stake.com, and I think those will be doing very well, but they are more prone to being winner takes it all markets.
Do we agree?
I think you may have to go again, because I very strongly agree with that.
It would invalidate a lot of your investments you've made, though. So,
we started investing in Web3 gaming in 2018, but I personally largely took a break from the space in 2021, definitely 22, as I thought a lot of the economy models we were seeing were quite unsustainable. Funny enough, Anton and Carlos have both been much more active than we have in Web3 gaming. But for me, the reason that's been the case is I just didn't understand why crypto was necessary for a lot of these things. If it's an open economy you want, oftentimes Web3 is actually one of the worst ways to get there. I think there are a lot of other benefits, as Justin and Hilmar and others have spoken to about Web3, and I think we're in the early innings of that exciting movement. But for me, the most exciting thing is trustlessness as a core design primitive, and that's where 99.9% of Web3 games fall down for me. Is I don't think trustlessness is a core design primitive of these games. And so going back to Anton's comment about casino, like for me, the most obvious application of a huge game that's crypto native is a fully on-chain player-owned casino. And you run into legal and regulatory issues. I used to be a lawyer for 5 years. I spent a lot of my last 6 months thinking about how can we incubate a project where we're creating a token, creating a fully on-chain game. And the reason we're doing that is not because crypto is cool, but because it's so important from a legal standpoint that we not be viewed as operating a casino, but rather what's traditionally considered rake or house edge gets redistributed back to the community in the form of a cooperative. So I think that as a primitive, this idea of a player-owned construct, where literally the moment the game is deployed, no one owns it and we can't shut it down even if we wanted to. Like that stuff is super interesting to me. And I just haven't seen a lot in that space, and I think it's going to get a lot more interesting going forward.
Now, Carlos, if you go down that direction as well, then all three of you guys go again. So I hope you have a different contrarian take.
I have a different contrarian take. I agree with Anton's take. I'll disagree on a technicality, which is just I don't know if it's the biggest outcome, but it's certainly like right up there. So I think the thing that we've been the most contrarian on, especially in the last 6 months, maybe 12 months, is we haven't really done a lot of infrastructure. You know, as a lot of the tourist capital has fled from investing in content, you know, like so much money was invested in content 2020, 2021, early 2022, and obviously most of that, frankly, just didn't go towards backing amazing product. And so there's this huge retreat from content, but people who still want to be long gaming are then doing infrastructure. And we have done infrastructure. We led the Series A for Immutable, and you know, like even today, I think about 30% of our fund recently deployed is on the infrastructure side. The issue we have is if we think about Web 2, it's generally been difficult to monetize infrastructure companies in Web 2. Some of the best examples of infrastructure companies in Web 2, like whether it's Steam or the Unreal Engine, they were content first, right? There was a magnet there first. And more importantly, the concern that we have is today there's very little capital available for the Series A in content, which means that the amount of viable studios, you know, in the next year or two will be extremely thin. And generally speaking, infrastructure companies rely on the assumption that you're diversified around 100 different clients that are each paying you a little bit of money. We don't think there's going to be 100 great games in the next 2 years. And the few games that we think have odds of being impactful great games will have so much leverage over the infrastructure provider, and there's so much infrastructure being invested to begin with, that it just seems like it's going to be very, very difficult in the next 2 years to monetize well and drive a good outcome with infrastructure. And so we have done infra, but we've been very, very careful around where we chose to deploy. And for the most part, we just want to be content first right now.
Yeah, no, that's definitely a trend that I think we've seen with you guys recently. But how about Richard and Anton? How do you think about the content versus infrastructure investment thesis? Do you think they actually go hand in hand, where it's a lot of the infrastructure sort of providers who end up creating their own content to show off what their infra can do? Do you think they're separate, and how have you been focusing your investments?
I can go first quickly. So I think there's a couple of things to this. I think for many people, they think that, you know, we still need a bunch of infrastructure to create games, but I think that for every game out there, there's 10 different crypto infrastructure companies trying to serve them. So I don't think that's going to be the bottleneck right now. Another thing is that if we look historically into gaming and big outcomes into gaming, they have been customer facing. And even though, you know, you have big IPOs such as Unity and also Roblox as a platform, if you look at some of the content companies like Supercell, they do 3x the revenue with a quarter of the valuation, as this revenue is not valued in the same way. But they've historically captured the value, and I think we're also seeing this on the mobile side, that more and more companies are becoming vertically integrated. You are building a lot of your own custom software to serve the custom needs of your users, and that's been really driving our content investing since day one, and investing into studios that, you know, eventually they become more than that one game. They become the sort of point of contact for users to anything within that platform. And any success that the platform companies have is a derivative of how well those companies are doing that own the customer relationship. And now that we're increasingly going into a world where gaming companies directly own the customer relationship, as we're slowly moving out of the app stores.
I think there's a few interesting themes in infrastructure. You know, like Solsta and Joe was speaking earlier, I think the whole digital therapeutic space is super interesting. If you consider how much time and energy people, especially, you know, young children and teenagers these days are spending in these purely digital environments, I think the intersection of health and gaming and digital worlds is a really interesting space. You know, we've been talking about advertising for a while. I mean, in a few companies, like Anzu, we invested in. Gadsby, a couple of others have attacked this space, but I also think that's one where you just look at the reach of gaming, it's bound to get much bigger. But in general, I think there's a distinction between Web 2 and Web 3 infrastructure, right? Because I think as far as gaming infrastructure, these SaaS businesses generally find themselves to be quite challenged. And so you run into a TAM question as a gaming investor investing in infrastructure. Funny enough, in crypto, the reason we have 5,000 L2s is because, you can get a lot of liquidity and money very quickly by doing yet the same thing over and over and over again. So I think the infrastructure question, you actually need to distinguish between crypto and non-crypto. And then within the crypto bucket, further distinguish between, are you going to launch a token, or are you going to follow more of a Web3 SaaS model? Because I think those are also somewhat challenged.
Yeah, and on the back of all of these sort of different models that you describe, can you all think about what do you consider today to be the most successful Web3 gaming company? I'll let you define sort of the metrics by which you consider that success, because there's all these different models that might have different metrics. But ideally, you'd be able to explain why you picked that answer, but also how you sort of measure the health of a game economy, of an infrastructure provider, whatever it may be.
Stake.com and Rollbit, looking at revenue per user, looking at cohort revenues, it's a massively profitable business. And I think at the end of the day, even though there's a lot of new components coming with crypto tech, in terms of like returning funds and just making sure that the teams also behind these, let's say, be it protocols or be it Web3 gaming companies, they still need to generate some sort of revenue to upkeep what they're doing and growing. And I think the biggest ones are still somewhere in between, where they tap into large existing user bases, but they leverage a lot of this tech.
I think Rollbit's super interesting in particular because of the transparency of the revenue model versus on-chain valuation. For the first time, you can take your financial analyst who's running DCFs and look at valuation of the token versus the daily buy and burn that's going on there. And that's pretty unprecedented for a casino to publish futures revenues, casino revenues, and sportsbook revenues on a daily basis. Personally, I still get a bit nervous because it's a very centralized operation still, and there's a lot of trust me in what's supposed to be a trustless context. But I do think economically that token is super interesting to look at. And in general, that's reflective of a bigger shift in crypto, which is, prove to me that you can generate revenues. And then not only can you generate revenues, but somehow distribute the economic value of those revenues back to users in some sensible way. Like the old kind of like DeFi governance token type of meme, I just don't think is good enough anymore. And I think the next thing we're going to really play with in the next 1 to 2 years is how can we actually distribute economic profits back to the player or user base without running afoul of securities laws, right? Because that's the biggest constraint to actually having your token do anything, is the fear that you'll violate securities laws. And so just getting to the point where you're checking off more of those boxes where it doesn't look like a security is critical. And unfortunately, I think one consequence is going to be that you just see jurisdiction blocks, US, UK versus kind of rest of the world.
But that's, I think, the biggest bug and the feature of a token potentially, that it's basically a stock on steroids in many ways. Mm-hmm.
Yeah.
Or it can be. It can be.
No, I like that description because, I don't think pure meme tokens are good enough anymore. So I think you need some revenue generation. But unlike a stock, the thing doesn't just discount to cash flows, but represents the engagement and expectation value of a thing like a meme coin, which has no multiple, right? So you kind of get the best of both worlds. And I think models where you combine macroeconomics of creating a currency with the microeconomics of an engaging game that's producing real revenue in GMV, the results can really be explosive there.
given that sort of all we've heard today is that the most important thing is fun, and from at least two of the investors here, we seem to be hearing that making money is fun.
But it's fun.
It is. I agree. But maybe, do you have a different view on the content first perspective?
I mean, look, I think I would have given the same answer as Anton around Stake and Rollbit as two of the best examples we have so far. And even in our own portfolio, the early breakout companies that we see are the ones that are closest to gambling line, but basically haven't crossed it, right? I think you can run a whole fund on that strategy, just like go as close to you can as gambling and just like don't cross that line, or cross that line if you're allowed to, right? But that doesn't surprise me because the games in our portfolio that we're the most excited for as consumers and getting the early, images and the demos and like all of that stuff, they're all multi-year builds. And so there's an unfair comparison where, we know how casinos basically work, and if you can make effectively an unregulated casino that people can easily move money in and out in crypto, especially people that want to, like if you want to move not entirely clean money, and the games are very simple, and you throw that on the internet, like you can do that in 6 months, right? And you're, whatever. But if you're talking about a Project Awakening, for example, that's a multi-year project. And when I think about the transformative potential, and to sort of earlier when I said I disagree with Anton of like the biggest source of return, I think there's amazing money to be made on the casino side, gambling side. I think it's a winner-takes-all model. We'll have to see who wins, kind of thing. But when I sort of reflect on like what am I trying to do with my time, and what would make me the happiest as someone who sort of participated in this moment of ecosystem formation, right, or of market formation, I would love to be proud of like fucking putting an awesome game out there and something that's like net new and not just like a casino on steroids that we sort of went around regulation. But all our founders that are on that, or not all of them, but the majority of them have taken a long time. The counter of that would be the people trying to do mid-core or casual games in crypto, and I'm not particularly bullish on that stuff working. Like I think the depth of the economic complexity of the game has to match the depth of the actual playing complexity of the game, right? Otherwise, it's like a rocket engine on a Fiat Pinto, right? You can't have complex economies in simple games. And so for us, like on the casual side, you have like a whole ecosystem of casual games, and you're trying to solve for retention, so people sort of like stay in the ecosystem versus churn out. That's a fine bet. And we're maybe starting to see that, but like the thing that really gets me excited, we're 2 years out, 1 year out from seeing it, and in the meantime, we're left with like the most basic raw PMF, which is like human speculation and greed with unregulated casinos, which is like an awesome business model, but
And maybe sort of following straight back to you on that, then if typically building a great game takes 2, 3, 4 years, but in the sort of the venture timeline, you tend to raise around every, call it 18 months on average. What sort of progress can you show within those first 18 months of building out that game? What do you as investors look for when deciding whether you want to follow on and add more capital to the adventure? And especially in the sort of the current market, which maybe comes out of 18, 24 months of a bear market with sort of some exciting news, but not quite in the bull market yet. What are you looking for from your current portfolio, but also from other companies that are looking to raise right now?
Yeah, no, I think it's a great question. And I think that sort of changes depending on how bullish or bearish the market is. For the longest time, it was really, really hard, I think, to show any meaningful progress in 18 months, and yet people could still raise that next round sort of more easily than today. And I think that was like in general a really bad time to be doing Series A and Series B gaming, because your risk reward, your risk is basically the same. You're still taking a bunch of distribution risk and sort of like, is this going to be fun? But you were paying 2 or 3x the valuation on a vertical slice, which sort of like directionally tells you the team can make a game. But frankly, like if you're pulling amazing teams from that shipped game 0 to 1 before, and they can't build a vertical slice, like the basic vertical slice, then something was like wrong, right? So it's very hard to show something. I think for us, capital efficiency, right? How much did you raise and what did you build tech-wise, asset-wise? Perhaps there's a core game loop that we can understand where it's fun and differentiated. And usually there wouldn't be enough to justify a lot of valuation, and we wouldn't be playing there. I think that the market has now shifted where there's not a lot of capital in that Series A stage, and if you see a team that's capital efficient, and you sort of can forecast how much more can they build with 2 years of runway, and you think that there's a defensible genre or something else within both Web 2 and Web 3, right? Like this game is net new in the spectrum of gaming, and it leverages crypto, and we think that at 2 more years gets us there, then we're more likely to make that bet.
I still really struggle with what I see as this tension between, like games need live ops. Like most games we're talking about that are real quote games. And there's a tension between the reliance on a central game developer to keep maintaining and developing a game versus the kind of securities law constraint of if you want to deliver real economic value, then there can't be a centralized promoter. Like that's the #1 tension, I think, existentially as an industry is very challenging about token models in Web3 games. And so as investors, we've kind of settled on this lazy, okay, well, let's take equity and tokens and kind of get upside on both. But I just philosophically find that still to be quite challenging of when you have a split economy across fiat IAP that's going to equity holders versus a token economy that is supposed to have some value and go to ecosystem participants in general. Like, how do you unify this tension is something I really struggle with.
Is this still on?
The time ended and they were like, time's over.
But I'll yell a bit. But I'll just add a final note there as well, because I also think this is a crucial topic now that there's companies that raised funding in the past few years and now they're facing their next round of funding. This is also partly why we've been historically mostly focused on mobile, is because the quick time to market and the quicker time to validate. Like, for example, Tribo games in our portfolio, within a year they were pushing out some of the early numbers and what they were doing, and that helps us in assessing and help them also raise the subsequent round. And I think especially now that we're in a market that historically has had very poor financing in Series A and beyond, because there's been a lot of hunger for pre-seed and seed, but essentially when somebody needs to start looking at metrics, then all things have gone quiet. And part of the reason is obviously the complacency around like everybody being used to SaaS metrics and free-to-play metrics and being able to assess kind of what is the benchmark for Series A, but we're kind of missing the benchmarks for this industry still. And I think the ones that will be shaping it are obviously like any live game that gets to show scale, and they will set the new benchmarks. But I think part of that is obviously finding the right investors that can have the conviction to underwrite even if you have less sort of hard metrics to show. But for sure, in this case, the platform definitely plays a role also in this, in terms of how, and the product, so let's say the production value of the product in terms of how fast you can show something that will then convince someone to underwrite your next round.
Fantastic, thanks a lot. I think we're over time. I knew that taking this sort of handheld mic would have some benefits, so we got an extra 30 seconds from Anton. But thank you very much to all three of you, and I think we have probably a couple of drinks at the other side of the wall, so we can head over. Thanks, guys.